Coronavirus, COVID-19, and oil price war spreads panic. Should we worry as the stock market drops? The Dow Jones Industrial average fell by 2,000 points on the first day of trading this week after an oil price war between Saudi Arabia and Russia drove prices to the lowest since 1991 started over the weekend. The oil war came on top of an already jittery market facing uncertain supply chain concerns from China and an explosion of COVID-19 cases in European countries such as Italy. But should we be concerned? After all, the president has trumpeted the market's rise as a sign of America's comeback and success. So is this fall a harbinger of more bad things to come? Well, strap in. We're going to find out today on the Rob Maness Show. Monday morning stock market start hiccuped almost immediately with such a rapid fall. Automatic halts to trading were triggered in the first few minutes. After the pause, the market seemed to stabilize, but eventually the Dow Jones lost over 2,000 points by the end of trading. Meanwhile, China is beginning a slow recovery with growth in new cases of coronavirus dropping and people starting to get back to work. That's a good thing. But demand is likely to be greatly reduced while the rest of the world sees virus cases increase and active measures to reduce exposure taking hold. As an example, Italy quarantined 16 million people over the weekend, but by the end of Monday, the entire country was placed on lockdown. These emerging Europe case numbers, combined with what appears to be a lack of reporting from Russia and South America, could be harbingers to a significant reduction in normal demand levels that Chinese manufacturers are counting on to give them a solid pathway for a return to normalcy. But the reality is, panic and fear are the bigger dangers at this point from the coronavirus than anything the disease itself presents. That fear will hurt small businesses around the world as oil and gas prices fall, and especially in the United States if stock markets continue to drop and overreaction measures to contain the virus drive demand reductions towards historically low levels. But hey, folks, you shouldn't forget that if you're home quarantined, you still have capabilities like Amazon, since the largest impacts would have been from China's supply chain issues, which, as I said, is turning the corner now. So no, all is not lost from a consumer perspective. And on the good news side of the ledger, it continues. Gas prices are now under $2 a gallon in a lot of places and dropping in America. So I expect that trend to continue even more as lower oil prices stabilize in the new Russia-Saudi Arabia price war market. Additionally, as someone who was out of the stock market, I look forward to getting back in once it appears this market drop has bottomed out. The buy opportunities are going to abound at all the market advisory companies like the one I use at Motley Fool are not panicked at all, but calling for calm and reminding folks that market investment is for the long term. And the market, over the long haul, always increases, while these drops are always very short-term events. On the government side, the Trump administration is floating a cut in payroll taxes, and I could agree with that, but any calls for further stimulus and bailouts by the government should be resisted. Government financial market involvement must be kept to a minimum in any situation. Taking drastic government action at such a critical time usually causes more problems than it solves, especially for those in the lower half of the economic spectrum. My advice to everybody, keep calm, prepare well, stay in the loop with local and state health agencies as they have the best information for your situation, and let the stock market sort itself out because it always does, and be ready to take those opportunities. And today's guest is Steve Hayes, the president of fairtax.org, a former tax attorney and an expert who's testified before the House Ways and Means Committee on tax reform. Welcome to the Rob Maness Show. Steve Hayes, welcome back to the Rob Maness Show, my friend.
Well, Rob, it's always a pleasure to be with you, and it's so delightful to join you on this lovely day in Florida.
Well, I appreciate you coming on. You've got a lot of expertise, especially in the financial world and economics and tax world, that there is just a lot going on this week. The markets fell dramatically again on
Yep.
Monday.
Yes.
The Russia-Saudi Arabia oil price war started over the weekend. Italy quarantined 16 million people over the weekend, and by Monday night had locked down the whole country due to the
Right.
coronavirus. So there's a lot of nervousness going on. You could see it in the markets, but really, I mean, what's your take on that from a big picture perspective? When you think about supply chains from China and manufacturing from China and their impact on American businesses or not, and then just the whole crisis itself as it's unfolding from a stock market perspective and an economic perspective on our country. Where do you think this is headed?
Well, there is a lot of obvious uncertainty the market's reacting to, but one of the things that's starting to happen is that a lot of the things that President Trump has really been upset about with China are being addressed now. I have a client that runs an investment fund. He has a number of operating businesses in which they've invested, in which they take an active part. And he indicated some things like there was one company that sourced pine nuts from China. And what they have done is they've found another source. In fact, it's one from this country, and they're providing that as a substitute. And they're paying a little bit more, but they actually have access. They have no problem getting it, and they're solving the problem. Other suppliers are going through similar things where they've had products coming from not only China, but other parts of Asia. They are making changes. And one of the things that's going to come out of this is a lot of them, what he predicts, are not going to go back to China. And so you're going to see a lot more sourcing of products in this country. And you're going to see, I think, sort of like in Italy, you're going to see a gradual slowdown of people, like you see pictures of basketball games being played with nobody in the stands. You have airlines which are looking at their biggest loss ever from the fact that so many people are not going to be traveling. Cruise lines, the same thing. So you're going to have huge impacts in a lot of areas of the country. But the fundamental thing that's going to happen is that businesses will survive. We will find other ways to do things. We may end up seeing some prices rise, and this is part of what I think President Trump's trying to do, is bring down some of the costs to the average person by going down on the employee side of withholding for Social Security. Now, I personally don't think that's a very good idea, but at the same time, it is something that he's doing to put money back in the hands of people, or he's intending to do. Now, as a factual matter, we are going to see probably continued disruption in the market, because the market, again, tends to be, let's just say, very reactionary, and they tend to get on they're sort of like the cattle on a stampede. Once they start stampeding, it's hard to turn them around. But they will turn around, and I think the fundamentals of this country are so good that even with this oil price, all these different things going on around the world, it's actually, I believe, just going to strengthen the United States.
Yeah, I've been thinking about that too as I was putting together the show this week. I've started to see reports that from the virus perspective in China, it looks like they've turned some kind of corner in lowering the rates of infection.
Right.
So they're talking openly in the media now about getting people back to work and reducing some of the restrictions. So their manufacturing is going to be coming back up. So companies like, if we do go into a long-term quarantine in large sections of our country, you still have companies like Amazon, right? And that kind of capability, which they were facing a supply chain issue. And like you said, they are addressing it, but with China starting to come back, I think from a supply perspective, things are going to be okay fairly quickly from what I can tell. Depends on what happens here in the United States and what really is happening, I think, in Russia and South America, in Europe, and hopefully the China reporting is more accurate today than it was in the beginning of all this.
Well, and that's always a risk when you listen to China, because obviously they try to twist things in the best way. But I believe everything is indicating that they seem to have turned a big corner, and that they're going to start releasing more of the restraints they put on their factories and their people. It's interesting that Z, or whatever, how do you say his name, the Prime Minister, President for life, hasn't been seen in some time. So there's speculation that he may actually have the virus. But there are going to be changes. And one of the things that I don't know really how to predict is, if you're going to start shutting down big factories in the US, are we going to see these people continue to be paid? In many cases, they do not have a plan that would continue their payments. And the companies, particularly the smaller companies, may not be able to pay. So I think we have some different economic issues that are not related strictly to supply of the product. Because in order to buy the products, you've got to have money in your pocket. And that's part of what I think is a potential problem. However, as more information about the virus comes out, and there's a lot of it that is obviously made by people who don't know what they're talking about, but there are some really top medical people looking at it now. And they gave the example of the Princess Cruise, where there were 705 people infected, and they had about a 1% death rate, which is very similar to what it would have been. In fact, it may be lower if they had a bad case of the flu, because of the ages of the people being older as a demographic. So, we're starting to get more facts. There's one doctor who I believe he works for Johns Hopkins, and he says he expects to get it, but he expects that most of us who contract the virus are going to think we've got a cold or maybe a mild case of the flu, and that'll be it. And it's the ones of us who may have more susceptibility because of our immune system or other medical problems that will have trouble. But he said it's a very similar type of reaction you have to the flu. So
yeah, the reporting,
a lot of this information is going to help, Rob.
Yeah, a lot of the reporting in the last couple of days out of Italy, the among the deaths from the virus, it looks like the average age of those that have succumbed to that is 81 years old. So that
Right.
fits with the data that we've been getting briefed from the Chinese CDC at first, and now the American CDC is putting out similar data that in your 60s, 70s, and 80s, that mortality rate increases exponentially in your 80s, especially if you have an underlying medical condition. It's going to be a problem. But I think in any age group, if you have an underlying medical condition, you need to be seeing a physician if you come down with this kind of stuff.
Absolutely. And that would be true, though, for the flu. That would be true for any other illness that came along. You would want to take that. And so what I guess I'm saying is, and I don't think it's any different than what you're saying, is that we're going to see much more of a calming down, like in the next, I'm going to say 30 to 60 days, of people no longer being so panicked about this. And we're going to see that have a dramatic impact on the production in this country and around the world. Like you said, China's got to come back. They don't have a choice. Their whole economy was teetering before.
Do you think most people are panicked about this in America? I mean, I know the media is, and I ridicule them daily, I think, as a lot of us do. Look, I ran pandemic planning as a colonel in the Air Force for some good-sized populations, and was doing it during the H1N1 issue, and we had a lot more deaths from H1N1 than it looks like we're having with this virus, and there were no closures down of big sporting events, or I see that New York's Governor Cuomo has locked down an area around a small town north of New York City, which it looks like they've got 100 cases broken out there, and it might be the right thing to do using the National Guard at this point. But they're sounding more and more, even the Democrat governors, like, hey, we have to do certain things and we're going to do certain things, but the president and his team are making good decisions. We're working with them and those kind of things. So even outside of the media, even with the political leadership that's on the opposite side at the state level, on the executive branch sides anyway, it looks like folks are starting to come together like we normally do in this country in a crisis situation. Is that your take on it too, Steve?
That is exactly my take. I think they're coming together. I think the only real difference, and this is from the media, and like you, I have very little, let's just say, belief in their integrity. But you see a lot of them actually gleefully hoping this becomes more of a problem because they think it's going to bring down the president in the election. But for the most part, American people are very rational. And I think after they've heard the media, some of these people in the media cry wolf a few times and look around them and see what's really happening, that we're going to see people getting back on airplanes, going on cruises. All of these things are going to start back again. It may take 30 to 60 days, but it's not going to be a 6-month lockdown. There's a lot of evidence that the contagious period is about 5 days for this. Mm-hmm. And so they feel like, and you, as a planner, you were probably there as well. In an abundance of caution, we're going to do 14 days because there can be some anomalies. But you're talking about something that's not a 3-month period. We're talking about something that's there and it's gone. And if the other doctors who have supposedly been seeing data from China and from other places in Italy are right, for most of us, it's going to be like we're going to feel a little less energy. We're going to feel like we've got a cold maybe, or a little touch of the flu, a little fever, and we're going to walk through it and not going to really affect us.
Yeah, I think so. I think the bigger danger, like I said before, is the panic and fear that the media is generating, because that makes people do interesting things. I think that's had a major impact on the stock market in the United States and probably around the world. I think it's had an impact on the types of decisions leaders are making about what they need to do to contain this. It's good to see so far our leadership across the board has been very measured in their approach, and they haven't been doing a lot of panic talk. But they are talking about, as I mentioned earlier, the president's team's now starting to talk about using the government to try to mitigate impacts from the economy. And I'm hearing things like stimulus, and we all know how that went last time, where the big guys all got paid off, and that was about it. When we spent almost $1 trillion on economic stimulus that went to the big money guys and gals in like Goldman Sachs and those kind of things, and very little to the average citizen. And look, Americans voted for America First for Donald Trump because they want to see Americans be put first. So what I'm hearing is this payroll tax. Look, I'm always for any type of tax cut. So I don't care what it is, because the government has too much money to begin with, and that makes them spend like drunken sailors. And that's what I'm concerned about. I'm hearing about potentially paid leave. You mentioned, if these companies, manufacturers go into low rate production or zero production periods, will they be able to pay their folks? That's a big piece of money. When you start talking about paid leave in any economic sector in the United States, let alone a lot of these, it's not just manufacturing, it's transportation and, hospitality, anything, the sports industry, anything that requires large numbers of people in close proximity to each other. So that's a pretty big chunk of money. Well, what are your thoughts on that? I mean, what should the government be doing when it comes to trying to mitigate the impacts of the economy on the little guy?
Well, I think what the president is doing, and what, as you say, most of the state governors, I think, are handling it very rationally. address the problem where it's a problem, and then let other people know when it's not a problem. In other words, nobody wants to tell Rob or Steve to go ahead and go on that plane, and then we get the virus and we succumb. Nobody wants to be in that position, and that's why you have a lot of people covering their behinds by throwing out all of these things. And I understand that. But at the same time, logically, if you have a guy who wants to come to work, like I have clients who may want to have a waiver signed. If the employee wants to come to work, which most of them will, and they sign a waiver, not holding the company responsible if they get the virus. I mean, there are lots of ways to get around this, and if the individuals have enough data to make a logical decision, which I think we're starting to get there, then you can do a lot of this, and you never have to have the government involved. Because the big problem I have, Rob, everybody wants to help. I mean, we are the most generous people in the world. However, how are they going to help? They're going to help by giving money. And is it going to be made up in taxes? No. Is it going to be made up in other ways? No. How's it going to come from? It's going to come from increasing the debt. The absolute insanity of thinking that, like I said, if you're in a hole, stop digging.
Yeah.
Well, the solution that's being proposed is going to, if the Social Security is going to hasten the demise of Social Security unless something else comes out, because the Social Security Trust Fund is a joke. It doesn't have the money the way it's set up. And that's why, I've talked before, I like the fair tax, because the fair tax is a tax on consumption, and it allows us to totally fund Social Security and fund anything that people agree on, but fund it in a way where everybody knows what it's costing them for the benefit. Bernie wants to increase tax rates zillions of times. He wants to collect all this money, and he won't collect nearly enough to do everything he's talking about. I mean, the numbers just don't add up. It's like his one tax increase, they project 291 billion over 10 years, and he's trying to finance what, $1.5 trillion a year of additional spending. I mean, it's nuts. It's not going to happen. So he's looking at just adding to the debt and let somebody else be responsible. Let my grandkids or yours be responsible for paying for it.
And who holds most of that debt?
You've got a situation that just doesn't make sense.
And who holds most of that debt, Steve?
Well, actually, China holds a lot of it, but more and more is being held by Americans. And if it's funny money, which it is right now, how does that factor in? I mean, you look at all the people running to buy Treasury bills, and the rate was what, 0.5 of 1%? And it's probably, in some countries, it may go to 0.
Yeah, I think it went below that yesterday.
Yeah, there's one country it did go below 0.
Yeah.
So, but here's the other problem, Rob, that I really think is overlooked, and that is you've got all the classic indicators of why we should have inflation. You're producing a lot more dollars that are chasing demand, and typically the prices will go up. And every generation before us, before this time right now, that's led to inflation. And it's going to come. It may not be as bad as Germany in the 1920s, but you look at countries around the world, when the economics of their dollar or their dollar equivalent start to go down, look at Venezuela. What do they have, like 10% inflation a day? That's just incredible. And, that's why people, when they get paid, they rush out to buy, because it's going to be, in 2 hours, it's worth 20% less. So, and that's an exaggeration, but not a lot. And so one of the problems that all of us have is that the debt, even though we can get people to keep buying it, is still going to be something that's going to lead to inflation, and that is the hidden tax that has killed people forever.
Yeah, and that's I think we're over 23 trillion now, and 10 of that came during the last administration, the Obama
Right.
administration, that is the emergency that very few people, especially politicians, will talk about or try to address. And that's why I'm concerned when I start hearing the folks in office start saying, "Hey, we need to bail this out and stimulate this and that." It's as if that they have an unlimited faucet of dollars that can never be turned off, and that's just not the case. Eventually, we're going to pay the piper on that,
The music. Yep.
and then the music will stop, and there won't be any
Yes.
chairs at all,
Yes.
and that inflation will be it. That'll be the payment that comes. So, yeah, I hear you. I just hope that these guys do the right thing and let the markets take care of it, while at the same time being compassionate to folks that are sick and getting sick, and make sure that our systems can take care of those that need it.
I think so, and a lot of the problem in China, from talking to some people that actually one person I talked to was actually over there, is that they had a huge panic of people rushing to hospitals who really didn't need to. But they started feeling a little funny and they rushed to the hospital. I'm talking about 25-year-old people.
Yeah.
And so a lot of their problem was just misinformation or lack of proper information. And that's part of what I think we're seeing when we say they're turning the corner, is that a lot of the people that had been rushing to the hospitals are realizing, hey, my brother Joe felt a little bad for a few days and now he's fine. And so if I'm feeling a little bad, maybe I don't need to rush to the hospital. Now, that's not to say that if you have another condition, an underlying condition, you have to be much more careful. But I'm talking about for the 95% of us, it's going to affect us, according to what I'm reading from competent doctors, probably no more than the flu and maybe less than the flu in some of us. So, we're not talking a situation here where 1 out of 5 is going to die. We're talking they're talking 1 to 2%. That's an enormous number planet-wide. But it's also a situation that, like you said, has been so far confined to older people or people that had what the medics call comorbidity situations, where they have other issues that reduce the ability to fight the virus.
Yeah, you mentioned folks inside China. I have contacts that have been inside China in the last 3 weeks. And at the time they were there, which was more than 2 weeks ago, they were about 250 miles away from Wuhan, which is the epicenter of the outbreak. And they said life was normal. The Chinese still have a great economy, and they've got some great high-speed rail, and these guys were moving around the country from facility to facility using mass transportation at times, and my friend said that you wouldn't be able to tell that something major was going on 250 miles away. So hopefully some of the weak reporting we're getting out of there errs to the good side too, and that things are better than some of the stuff that we've been getting. Well, I appreciate it, Steve. Leave us with what you would be recommending to the president's team about this situation. Give us a couple of good recommendations.
Well, I would keep my eye on it, obviously. I would make sure that any facilities in the federal government, military or whatever, could be made available if it becomes necessary. But I wouldn't panic. And I would encourage people who have factories and who have other things to invite their employees in, sign waivers, do whatever it is. But let's let the American people handle this, because they're going to do it much more effectively than any government entity can do. That's been proven over and over again. We have the ability to do it, we can do it, and we should do it.
Well, thank you very much, Steve. We'll certainly put that out in the show, and we appreciate you coming on and helping us work through these issues.
Rob, it's always a pleasure, and thank you again.
like to thank Steve Hayes for joining us today and helping us work our way through all the issues associated with this big danger of fear and panic that's not warranted yet when it comes to the United States economy and our citizens' health. Until next week, this is the Rob Maness Show.